Finance Minister Lim Guan Eng has told banks to either be more flexible in granting loans or brace for a possible windfall tax. Lim cites the many complaints lodged with regards to difficulties in obtaining loan approvals due to the lender's very conservative stance. He points out that banks have been reporting huge profits, with some registering record highs last year, and says it's time these lenders started lending. A windfall tax is a levy imposed by the government against certain industries when they experience large unexpected profits thanks to economic conditions. Separately, Prime Minister Tun Dr. Mahathir Mohamad says Malaysia will cut the corporate tax rate for SMEs to 17% this year from the current rate of 18%. This is applicable to SMEs with paid-up capital of below 2.5 million ringgit and businesses with annual taxable income of below 500,000 ringgit. As for large companies, the tax rate is slightly higher, although the effective rate stands at less than 10% due to incentives. Mahathir also highlighted that there will be no new taxes this year, with the exception of soda tax, which is set to be rolled out on July 1st. Putrajaya is looking at listing mature state-owned entities as it seeks to bolster its fiscal position and plug the almost bottomless pit created by the 1MDB scandal. Prime Minister Tun Dr. Mahathir Mohamad says a panel is now in the midst of identifying opportunities to potentially monetize assets. This strategy includes pairing some of the GLC's stakes in public listed companies in an orderly fashion. He adds that any disposal or monetization exercise will not be done at fire sale prices to ensure there are no disruptions to the capital markets, confidence to the financial markets, ratings environment and economic growth. However, the PM did not name any specific companies or reveal a timeframe for the proposal. Meanwhile, Mahathir also says that there will be no more appointments of politicians as heads of mission for Malaysia or GLCs, and that those who are in the wrong will be removed. He also notes that some remuneration packages of directors and senior management in government entities are obscenely high, although that's about to change, with the PM's office finalising the guidelines for compensation. Economic Affairs Minister Datuk Sri Muhammad Azmin Ali says the government has finally approved the 1.6 billion ringgit Kulim International Airport in Kedah. This is part of efforts to bridge the development gap between the different regions in the country as provided in the midterm review of the 11th Malaysia Plan. Putrajaya also green-lighted a 1.7 billion ringgit portion of the Northern Corridor Highway, along with 3 other projects in the northern state. Azmin says the regional development agenda is one of the promises of the PH government that will be realised via strategic alliances with many parties, including the state government. The Kulim International Airport was proposed several years ago during the previous BN administration. Once the bone of contention between then Penang Chief Minister Lim Guan Eng and Kedah MB Datuk Sri Mukhris Mahathir, the airport was expected to contribute 192 million ringgit to gross national income by creating 8,000 new jobs and 13.75 million ringgit in revenue for the Kedah state. Tycoon and PLS Plantations Executive Chairman Tan Sri Lim Kang Hu says the company expects to return to profitability in FY20 as its oil palm plantation reaches maturity. Lim says the company's oil palm trees are all now in their mature year, so going forward, he sees production increasing in coming years. Meanwhile, PLS shareholders have also approved the group's planned diversification into the durian plantation business via the acquisition of a 70% stake in Dulai Fruits Enterprise, a licensed durian exporter to China. The deal comes with a net profit guarantee of at least 10 million ringgit for the next 3 fiscal years. Lim says the diversification is a synergistic and logical business expansion from PLS's existing core businesses. In the long term, he expects durian plantations to be Malaysia's new revenue stream via exports. Lim is a co-founder of the plantation firm and also executive chairman of Ecovest, as well as executive vice chairman of Iskandar Waterfront City. Earlier this month, he sold his entire 23.42% stake in PLS Plantation for 76.5 million ringgit to Ecovest. Scientex reported an 8.5% improvement in second quarter net profit to 73.75 million ringgit as it recorded higher sales in both the manufacturing and property divisions. Revenue in the quarter grew 21.6% to 766.59 million ringgit. For its first half, however, Scientex's net profit fell by 9.2% to 127.41 million ringgit, dragged by higher interest expenses, taxes, and a swing to forex losses. Half-year revenue climbed 15.1% to 1.48 billion ringgit, thanks to a 21.5% increase in manufacturing income, which more than offset the 1.3% decline in property revenue. On prospects in manufacturing, Scientex plans to expand its production capacity in the US via automation and explore new markets such as Myanmar. As for its property segment, Scientex will expand its affordable housing footprint in Malacca, while also working on its newly launched Rawang development.